Welcome. Well, it's the last trading week of June, still the last trading week of June. Also, the second quarter winding down, and the first half of 2024. We're expecting earning reports for half year and for second quarter sometime in July. But today, let's get to the top stories that sets your agenda now. With effect from July the 1st, the price verification system portal used by importers for foreign exchange will be discontinued, and that's according to the latest directive by the Central Bank of Nigeria. In a statement released, the financial market regulator says the move follows recent developments in the country's foreign exchange market. This means that importers will no longer need the portal to validate Form M applications, document used to declare the intention to import physical goods. Just last year, the CBN introduced the foreign exchange price verification system portal to enable importers to access Forex and made it mandatory for all Form M requests effective from August 31st, 2023. We'll drill down on how that's going to impact the market. Well, to the FX market now, after breaching the 1,500 Naira psychological level, the Naira weakened more against the dollar, with the NAFEM window experiencing scarcity of US dollar. See weakness there for the closing yesterday, 0.47% down. That's what we have for the NAFEM window at 1,507 Naira to the dollar. We also see NAFEX there from 1,492 Naira to close at 1,502 Naira 43 kobo, also down 0.65%. So we're still seeing weakness right there in the FX market. To the global oil market now, see oil prices slid in early Asian trade today as a surprise build in U.S. stockpiles fueled fears about slow demand. We see Brent crude down marginally 0.07%. $85.19 a barrel, and for the U.S. grade WTI, the cheaper version there, $80.79 a barrel, down 0.14%. To other stories now, capital is the lifeblood of a corporation, and as countries and businesses strive to increase capital flow, conversations about mobilizing private capital is more apparent at this time. This informed the decision of the United States Agency for International Development and Chapel Hill Denham to put together a conference on mobilizing private capital to drive investments into sectors that enhance Nigeria's economic and social development. Take a listen.
Beyond just the function of the national grid, the renewable energy sector is a fertile ground for innovation and entrepreneurship. When I think about the 70% of this population that's under the age of 24 with high unemployment, it is all of you in this sector, in the private sector, that will ensure and create jobs and opportunities.
For us, infrastructure is a key area of the business that we've developed, but our business is really focused on areas that are accretive to Nigeria's economic development. So we build the business around big themes from infrastructure to renewable energy, to providing capital, for sectors that have limited access, to capital, and that includes, everything from, gender to, the creative economy, all of these sectors to venture. We're trying to push to see how we can get more institutional capital into them, and this is how we're going to develop this country.
And now for commodities market update, we have Mr. Bismarck Ruwani, CEO of Financial Derivatives Company, joining us via Zoom. Great to have you on the show. Good morning, sir. Great to have you. So you might have to unmute. I saw your mouth moving, but I couldn't hear you, Mr. Ruwani. But to the conversation now, we had reports.
I'm now unmuted.
Fantastic. I can hear you loud and clear now. Fantastic. So we had reports of a fire outbreak in a section of the Dangote Refinery yesterday, but there's relief now. It was contained. But does it pose any risk to plans for PMS production in July?
No, not at all. I think it was a minor incident which was contained and easily managed, because in the refinery complex, there are all sorts of mitigants that are put in place. So it was immediately contained, it has limited impact, and production has actually commenced again.
All right, so definitely we've seen a relief also on social media. We've seen people talking about let nothing happen to our refinery at this time. But going forward, we've seen issues around supply of crude, to the refineries. Talk to me about what you're seeing right now. In your view, do we see crude supply, going into the second half of 2024?
Yes, there'll be increased crude supply. Basically, the crude oil market is a very efficient market. You have contracts into forwards, futures, and also long-term commodity contracts. But you must understand that you have multinational oil companies that produce here under the production sharing contracts and under the joint ventures. You have the NNPC portion of production. So basically, what people have misunderstood is that the oil companies are obligated, they have their long-term obligations because they paid their operators margin. They produce committed into long-term contracts, and therefore you can buy either directly from whoever they are selling to, or you can also buy from the NNPC. So I think all this talk about sabotage and all of that, I think it's misguided. The truth is that the oil companies have their contracts. The Dangote refinery is efficient and it's going to produce a lot of quality products. And over time, the Dangote refinery will be buying both domestically and internationally, while they'll be serving both the international and regional markets accordingly. So I wouldn't be disturbed about it. Or what the program is that the price of diesel has come down. The Dangote refinery is going to commence immediately, I think now, aviation fuel, and which is a big product. The dual purpose kerosene. They're also going to be producing the PMS down the road in July, August. So everything looks good. But the point is that it will be at international price. That's what it is. What the Dangote refinery is offering is quality, quantity, and certainty of product at all the time. So Nigeria, the days of oil petrol scarcity are over, but there's still some work to be done in terms of looking for the efficient and equivalent price at which it will be sold, both domestically and across the whole of West Africa.
Right. All right, let's look at other issues right there in the FX market. The seculars are back again with CBN discontinuing the price verification system for importers. I remember this move was aimed at curbing malpractices such as over-invoicing of imports and under-invoicing of exports and round-tripping. Is there a risk these might return in full force? No,
there's no risk. The truth is that the moment you reduce the number of bureaucratic bottlenecks in a market, the more efficient the price. The reason why you had this reason for over-invoicing was because there was a big difference between the parallel market rate and the official rate. Then it made sense to over-invoice imports and under-invoice exports. Now that there's no fear of that, because the difference between the parallel market of 1508 and the official market of 1495 is only 10-15 naira. It's not worth your incentive. There's no incentive in trying to round trip. Therefore, by removing this price verification document, you actually made it easier for people to open LCs and for goods to come into Nigeria. So it's a good move. And what the central bank is saying in so many words is that there's no incentive for arbitrage as long as the price difference between one and the other rate are narrowed. As a matter of fact, we can call this, to all intents and purposes, we can say there's exchange rate unification in Nigeria today. There is one rate because the difference between one and the other is minuscule and marginal. So I think that it's an efficient move. It makes the market more transparent, and as time goes on, you will find that this difference will narrow to almost zero, and that's what will be achieved. So it's good news for now for the foreign exchange market, and we think that we'll see some stability in the market now.
Right, and talking about stability in the forex market, we see all these moves from the CBN is trying to create, stability and give some strength to the naira at this point. But I'm wondering if you see a time soon where we actually really see stability, in Nigeria's FX market. We're also seeing African currencies, struggling a lot at this time, and we're seeing of de-dollarization, still drumming at this point. But when do you see stability, with the naira and the Nigerian market?
Okay, let me say that stability doesn't mean a naira appreciation. You can be stable at 1,500, but when you look at the purchasing power parity value of the naira today, should be about 956 naira to a dollar. When will the naira appreciate from 1,500 to 956 or maybe 1,000 naira to a dollar? This will not happen until about maybe later this year or maybe early next year. So when you start having that kind of rate, you see the naira would appreciate maybe first and foremost about 1,200. I said 1,200, 1,300 before. It will be stable there and then gradually appreciate based on one, the price of oil, the oil revenue, two, the non-oil exports that are coming through diaspora inflows. Three, the stability and confidence, which will mean that the investments, portfolio investments, one, which is hot money, and foreign direct investment, two, and then also the fact that Nigeria begins to benefit from initiatives like the African Continental Free Trade Agreement. So, generally speaking, let's get one thing clear. One, a stable currency does not necessarily mean an appreciation of the currency. It is stable, the currency is stable as we speak. Now it begins to appreciate as when inflation begins to decline and interest rates have stayed high, then you begin to see it appreciate gradually. When will the appreciation begin to become manifest to everybody? I'm saying more towards the end of this year and early next year. Then you begin to see a significant appreciation, maybe up to, say, 1,300, 1,200 to 1,300 towards the end of this year. But not before inflation begins to decline. When inflation begins to decline towards 26% from the current level of 34, then you see the currency begin to appreciate at the same time.
Right, it seems we're getting used to this level above 1,000 naira to the dollar at this time. But let's look at the global energy market. Now, I expected, natural gas would receive some strong demand and maybe translate to higher prices due to heat waves we see in parts of Europe. We did see natural gas, I think, sometime in 2022. It did get as high, almost $10 for natural gas, but now we're seeing it sub $3. Why are we seeing this depressed price, even with high demand for natural gas?
Well, I think normally natural gas is used for heating, but the rest of the world is not used to these high temperatures. So we're seeing that contradiction. But basically, you know that the Ukraine war actually exaggerated the demand and the demand for natural gas at that time, because there were supply constraints. But now that there are ways around it, I think the markets are now beginning to stabilize. And a lot of people that went into the forward contracts are now allowing those contracts actually mature and dissipate. So we see market stability. And that's why from excess demand, there's now kind of excess supply. And the winter is not, we still have the summer months now, June, July, August, and September, before we start seeing this. And there are so many things that are in play, both political and economic. So generally speaking, while Russia is still determined to make sure that the Ukraine war continues, the Ukrainians have got their support, financial support, and now we can see that stabilize. So I wouldn't lose too much sleep. LNG constitutes only about 14% of our total exports, which is significant. And every price increase in LNG has an effect on our income. But generally speaking, the Nigerian LNG is well positioned. They have 7 trains, and we are able to compete in that market. But what we have lost to some extent in the price of LNG. We are making up significantly in the price of cocoa and other non-oil exports. So generally speaking, when you're talking about the foreign exchange market in Nigeria, and I'll come back to that, when there's some consistency in our export performance, if the terms of trade begin to improve, there was some announcement of terms of trade yesterday as well. That was for first quarter. I think that with the price of oil now at $85, $86, you just mentioned that, and the production probably creeping back up, we may see reliance or our vulnerability to LNG prices may not be as bad as it looks. So generally speaking, I think from a macroeconomic perspective, the Dangote Refinery producing without any disruption, thank God that the fire was a small and contained fire. 2, that the price of diesel is at 1,100 naira a litre, and we expect aviation fuel to kick in as well and PMS to follow. Whereas OPEC quota is we are still producing below our OPEC quota, but that will increase, generally speaking. And with high interest rates and containment of inflation, things may be looking cautiously optimistic towards the end of this year.
All right, well, I guess hopes are high that inflation will moderate in the second half of 2024, definitely. We can actually feel it in the markets. Yes. Thank you so much. Always great having your perspective, Mr. Bismarck Rwani, CEO, Financial Derivatives Company.
Thank you.
All right, to the markets now. We see the Securities and Exchange Commission and Nigerian Exchange Group PLC have reaffirmed their dedication to the comprehensive digitization of the capital market, aligning with the transformation strategy outlined in the revised capital market master plan. The announcement came during a press briefing and stakeholders engagement session held at the Nigerian Exchange Group House in Lagos. Both organizations detailed collaborative efforts to develop a digital solution aimed at transforming the primary market equity capital raising process with focus on public offers and rights issues. Take a listen.
I'm talking from it.
You can't be a world-class capital market without digitization. You can't be a world-class market using papers. You can't be a world-class market not being able to capture adequate information. You can't be a world-class market with, load of unclaimed dividends. So, for us at the SEC, and especially for this team, the new team that has been appointed by the president, we are committed to creating a market that is new, a market that is viral, a market that is full of innovation, a market that you all will be proud of, that you are part of. One way of doing that is through innovation.
We are lucky that this round of capital raising is by the banks. So we are not saying that you can't fill paper. You can fill paper as an investor, but the platform must receive digital. So the question is, how does paper go into digital? There are two different conversations. So for that man in Damaturu or Sokoto, he should fill a paper. What we're saying is, because that man probably has a bank somewhere around him, and likely the bank in question, so if you think again, how does paper come in? People would walk to any of the receiving agents and give them a paper form. They'll walk to a broker, they'll give them paper. They'll walk to a registrar. If this was a non-bank, you walk to any of the banks around you, you have to go somewhere to get that paper. And we're saying now, if a bank is raising money, 99.9% likely that the source of that paper is the branch of that bank, for example, not the branch of another bank, just because the banks in this atmosphere are probably still trying to manage that. So it's a blessing in disguise.
All right, now to our next conversation. African businesses have struggled with cross-border payments for a long time now when conducting transactions with partners in different countries. They frequently have to change their domestic currency to the US dollar, which increases expenses and complications. The Pan-African Payment and Settlement System, PAPS, under the AFCFTA, seeks to address this challenge. PAPS is envisioned to facilitate direct trading among African businesses using local currencies, removing the necessity for intermediary dollar conversion. Well, let's discuss this and other matters. Now, joining us for this conversation is Ola Oyetayo, who's the co-founder and CEO at Averto. Great to have you on the show. Good morning.
Thanks for having me.
So first, let me get your reaction to the CBN directive to banks to pay diaspora remittances in Naira and not the dollar. What do you think of this?
Sure. So I think it's a good development. The directive is actually to have CBN be a participant to be able to buy dollars directly from IMTOs. So I think it's a good development because it allows that CBN should be able to supply liquidity to the market. So sometimes what IMTOs face is they want to sell into Nigeria, but their bank counterparties don't have the liquidity to settle on time. So by CBN also being able to participate as a Naira seller for hard currency from IMTOs, I think is a good development for IMTOs and for the remittance market in Nigeria in general.
But do you think those receiving these remittances would be happy with this development?
Yes. So I think there are two things here. One is the directive to settle in Nigerian Naira. And then the other is the confirmation of CBN being a participant in the market, being able to buy Naira from IMTOs. And beneficiaries of remittance flows, from the research we have done, actually prefer to be paid in local currency, mostly because over time, the requirement for and the means in which remittance has been disbursed has become more digital. If you're a beneficiary of a remittance from someone abroad, you would actually prefer if that money gets into your Nigerian bank account in Nigerian Naira, so you can use it for whatever you want to use it for, whether it's to pay medical bills, settle domestic outstanding liabilities. If it's in hard currency, it works in a market where you actually need to go into a bank and get cash, or the money comes into your domiciliary account. You have to remember that if you receive it in hard currency, you would still have to convert into Nigerian Naira, because obviously Nigeria is not a dollar economy, as we all know. So removing that requirement to convert on behalf of the beneficiary from hard currency to Naira is a good thing. So I would say that it's actually not a bad thing to say that you should settle diaspora remittances in the local currency, which is Nigerian Naira.
Right. I guess for me, anything that increases demand for Naira, I'm down with that. Look, let's look at trade now. Can you walk us through the specific features or functionalities that empower businesses to receive and transfer payments efficiently across Africa, and that's using local currencies?
Yeah, absolutely. So one of the things that we do here at Veto, and I think you referenced perhaps earlier as well, one of the things we've done is we've built a platform that helps for interoperability between African currencies. It is so weird that Africa, 54 countries, about 47 different currencies across those countries. Typically, when businesses trade in Africa, they actually trade in US dollars. So if I'm a Nigerian business and I need to buy goods from South Africa, my South African supplier would most likely quote me in US dollars and issue me an invoice in US dollars. It's estimated that about 92% of intra-Africa trade is actually domiciled in US dollars. And if you think about that is actually weird. If you're in the UK and you want to make payments, you can convert between pounds and dollars to the US. But if you want to make a payment to Europe, you're not going to do it through dollars, you're going to do it through euros. So it's very weird that African businesses need to transact through the dollar. What we've done at Veto is to build a platform that actually help you convert a local African currency in markets that we operate in into another local African currency. So it helps facilitate trade directly between those countries, which also means that you do not need to transact through the US dollars to be able to make payments for goods and services abroad. And if we think about all the aims of PAPS as a settlement system and the Africa Free Trade Agreement as well, if you want to stimulate trade between African countries, the first thing you need to do is to lower the barriers to entry when it comes to currency conversion and allow those countries to be able to transact with each other in their local currencies. And that's what we aim to do primarily at Veto with respect to what we're doing with our Africa operations.
All right, let's look at the issue of you talk about trying to trade in other currencies at this time. So we're hearing the drums of de-dollarization at this time. We've also heard reports about the Saudi Arabia petro-dollar agreement with the U.S. Not being renewed at this time. The reports of that, some say it's fake news at this time. But is the de-dollarization process happening faster than expected, in your opinion?
Very, very good question. So it's not happening faster than expected. I think the dollar is still the world's reserve currency. Most goods and extractive, commodities are still priced in dollars. The minute we stop having, say, fossil fuels as the world's primary energy component, then you can say that maybe the de-dollarization might be expedited. But at the moment, the world would still price oil in US dollars, for example, as the benchmark, and other goods and commodities as well. What we're seeing, especially with obviously geopolitical tensions across the world, is what I'll call isolated cases of specific countries choosing to reduce their exposure to the US dollars. So China is a good example. Russia is another good example with the recent sanctions post the war they've had in Ukraine. And I would see that as a trend that continues. But I would say that de-dollarization is not happening as fast as everyone thinks. But it definitely is a trend that is taking shape and is happening in specific spots across the world.
All right, let's look at another issue that with multinationals. We've seen trap funds has long been a hurdle, for most of these multinationals operating in Africa, leading to some exits in some markets. How do you think this challenge can be permanently resolved?
Yeah, sure. So maybe just to isolate that to Nigeria, because I think that in most of these instances, these are actually multinationals operating in Nigeria, and that some of them have been doing this for a few decades, choosing to kind of exit from the country. I would actually say that over the last 7 or 8 months, a lot of the reforms and policy work being done by the current central bank administration has actually started bearing fruits. So now we have, I would say, a unified exchange rate within the country. So give or take between what you might call the parallel market and the official market, which is now NAFEM, there might be a 10 to 20 naira difference, but there is somewhat a unified exchange rate. And there's also a lot more liquidity in the market as well. So genuine business requirements for hard currency in order to repatriate funds outside of the country. I believe that there's a lot more liquidity over the last 7, 8 months that there's been over the past few years. So I would actually argue that right now, if you're a multinational with Nigerian naira that you need to repatriate abroad, you actually have ample liquidity to be able to do that over a period of time. So you might not be able to, if you want to move $20 million, perhaps you can't do it in a day through NAFEM. But over a week, you should be able to. So there definitely is a lot more liquidity in the market. And also what's most more important is that the rate has somewhat unified. So you can actually maybe plan over a week or two. You would actually be able to get your money out, which is a very, very good development, which we didn't have in the past, because prior to this, there was an official rate, which was way off the kind of market rate. And then you sat on a queue with the central bank trying to get your money out at the official rate, which obviously wasn't sort of something that you could do. But now with the unified rate and the fact that there's the autonomous foreign exchange market, which is well functioning, and there's a lot more liquidity in that market, I would say that the instances of multinationals talking about trap funds should actually reduce. Obviously, if you've made your investment in the country in US dollars at 500 naira to $1, and it's now 1,500 to $1, then obviously that's not great from a multinational.
Right. Well, we need as much liquidity, definitely at this time. Thank you so much. Great having your perspective, Mr. Olaoye Itao. He's the co-founder and CEO at Virtual. Thank you so much for coming on the show today.
Thanks for having me.
All right, that's it from me on Business Morning. We'll give you a summary of the stock market close later on and the FX market. Thank you for watching. I'm Ladi Williams. I hand things over now to the Sunrise Daily team.